Hello and welcome. Good morning, good afternoon, good evening, depending on where you are from around the world. I know that always when I'm doing Forex specific webinars, definitely people from various regions and time zones. So thank you for joining. As always, questions are appreciated. And so if you have any during the broadcast, please go ahead and type them in, and I'll make sure that I check back with the panel and try and answer all of your questions. We're going to do a quick quarter one review and quarter two preview. You have my email there. You have the IBFX Daily Forex Trading Edge.com website where I update my posts almost every day. I updated one today kind of as a lead into tonight's webinar, so go ahead and read those to stay in touch on what I'm thinking about on a daily basis. But obviously Daily Forex Trading Edge is also the home of a lot of different collaborators that will provide analysis on behalf of IBFX. And then you have my consulting firm and the website there, jupiterpeakfinancial.com. So again, if you have any questions about what I do and how I approach the markets with individual clients, you can go ahead and reference that website there. Before we get into things, let's go ahead and do the disclaimer. As always, I'll just leave this up for a few moments. And the next one, volatile markets disclaimer. In volatile or fast-moving market conditions, stop and conditional orders become market orders to be filled at the prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed. Substantial losses may still occur. So remember, every order you put in is a market order. Outline, fundamental analysis, quick catch-up. Obviously, that's what we'll be doing is we're looking back at the fundamentals over the past quarter, and then we'll have technical analysis as we go into the markets and seeing if there's any relationships that are lining up between various markets out there. Quarter one review, so just a bullet point there, end of the equity bull, not as of today. International central bank and government events, so you'd still have to be aware of those macro events, which we'll talk about, and obviously technicals in quarter one, and then quarter two technicals, the preview, focusing on macroeconomic fundamentals, any intermarket relationships that there are, and technicals. And of course, I'll always leave you with a quick review and make sure I answer questions and provide links for resources. So fundamental analysis, the importance of fundamental analysis, I stress that there in italics. A discussion of current events and what they mean for traders and investors. I'm going to do this a little bit as we get into the markets and into the meat of tonight's subject, which is kind of looking in the background in the past and then also looking ahead. But this is just how you stay on top of fundamental analysis. As I said, use your broker. They're providing great fundamental information and technical information for you through various educational parts of the site, such as Daily Forex Trading Edge. Forex Factory, which I'll reference tonight. There's a link within IBFX to go there from the website, and I have it brought up already. It keeps you on top of all the macro and micro fundamental events. And then obviously a TV station such as CNBC or Bloomberg and other market sites that you're used to using. Technical analysis, just key points that you should be aware of when you're using technical analysis. Trends, support, and resistance. Those three words, I think, are very key when you're trading. And I think if you understand those and trade using those, you can be what I call, quote unquote, a safe trader. I'm not saying that that's a guarantee that it will be a winner versus having a loser. I'm just saying I think that you can learn to trade in safer locations and limit the amount of risk you take. Again, you still could have a loser, but I think you can put the risk reward in your favor versus being upside down if you don't know where to trade, where there's a trading edge. And that's why we like to use trends. That's why we like to use support where other people are buying and resistance where other people are selling. And if you can find something that's working, one market driving your market that you're trading, that's an edge, and that's what I call intermarket relationships. I put there that they've broken down as of late as far as the one that we were used to, and we'll talk about that, but a new one has come into play, and I want to know what you're finding that's giving you a trading edge. So quarter one review, I want to talk about equities. I want to talk about central banks and governments because, as we know, just last week, the Federal Reserve still came into play in the United States. They're still there, and they're still accommodative, and they still have the same easing stance out there. So all of the currencies around the world, those central banks are being accommodative to try and fuel economic growth. Obviously, we just saw the latest round of central banks or international monetary funds stepping in and regions of the world helping each other out in the case of Cyprus. And that's why the equity markets are still going to all-time highs day after day after day, because they kind of realize that no matter what goes on poorly out there, there may be a central bank or a region of the world or a monetary fund, international monetary fund, to get together and bail that country out. Again, Cyprus is a very small country. I can't really believe that we're spending this much time on it, but that's the latest and greatest as far as the macro fundamental news. Technical picture, we've seen an increase in average trading ranges for a bit, but then lately, that happened a few weeks ago, but lately we've almost seen a decrease a little bit, and that's where we'll move into right now as we slide in. So I'm going to switch the screen here, so it'll just pause for a moment. And I'm going to go ahead and bring up first that website, forexfactory.com, just so you know how to get there. It's a free website. They do a very good job of providing daily market commentary, and they do a very good job, obviously the best job, I think, of providing an economic calendar as far as macro and micro events. So not such a busy week this week as far as the U.S. calendar goes. Very busy week next week. Obviously, there's a holiday tomorrow and Monday around the world, so markets could be a little bit sluggish. But after that, Tuesday on of next week, Wednesday on in some parts of the world, it'll be pretty busy around the world, I think, with some economic data coming out. But this is your site. This is what you should be paying attention to. Stuff like Fed Chairman Bernanke speaks. That's the U.S. Federal Reserve Chairman. Bank of Japan, if you're trading Japanese currencies, the currency of those markets, you should be aware of it. GBP, Chancellor Osborne, that kind of stuff. The micro events are how is the economy doing, such as durable goods in the U.S., consumer confidence, new home sales, unemployment claims, consumer sentiment, things like that. Those are the micro. The macro are central bank announcements, people speaking that could affect interest rates. So I just wanted to show you that. Now jumping into, before we go into the IBFX MetaTrader 4 platform, we will bump over to their sister website or their partner, and we'll move over to the TradeStation platform. And again, we're just focusing on the last quarter, the last 3 months. So here you have, since the beginning of 2013, the S&P going from about 138, 1380 in the S&P index, all the way up to 1560 to all-time highs as of today, the highest close it's ever had, ever today, all in the light of everything else going on around the world. So equity markets have gone to the moon. This is just something down here below, is one of many volatility indexes, and you can see that the volatility index is declining, January, February, March, and April. All right. Just before we get over into the IBFX, all right, just before we go there, I just want you to realize what happened in the summer of 2010, the summer of 2011, and the summer of 2012. All 3 times we had a pickup in volatility, and the equity markets declined in the summer months, and then in the fall months, so quarter 3 and quarter 4 of the calendar year, the equity markets went to new highs later on that year. All right, they had a strong June, July, August, September, October, November, December. So the past three years, 2010, 11, 12, the equity markets have done what we call the sell in May and go away. They had a really good first quarter, like they did now. They had a really good April, and then May, June, July, kind of August-ish, something like that, 3-4 months in the middle, they dipped. Not a lot, but they did dip. All right, they dipped a little bit more in 10 and 11 when we were first getting into Europe. Last year, a very small dip. Now, again, we had a very good first quarter. We'll see what happens in April. But what's going to happen in the summertime? Summertime is hard for trading because lots of traders take the time off. In Europe, they like to go down to Portugal, and they go to the Algarve, and they go to the beach. In the U.S., they leave New York, and they go to the Hamptons, and they go to Long Beach Island and places like that in New Jersey. So you remember, summertime tends to have less traders there because they're on vacation, but summertime has been a little bit more active because there's been a little bit more volatility. What's going to happen in this next quarter, too, which does involve April, May, and June, so the beginning of summertime, and definitely 2 months of that sell in May go away. So just keep that in mind, all right? Now we're going to flip over and see what Forex has done in response this year, this quarter, and as I said, I'll compare it to what equities did in the past 3 summers where they did a quarter 2 sell in May go away, and see what we can derive. In the past, if you focus on what the U.S. markets did as far as equities, and the world markets did, and what the U.S. dollar did in the past, it's been the when the equity markets sold in May and went away and went down, the U.S. dollar strengthened. When the equity markets went up, the U.S. dollar weakened. Now, as you can see, for whatever reason, this quarter, equity markets have been on fire, and look what's happened to the pound in the past 3 months. The pound has weakened significantly, went down, down, down. So the equity markets went up, and the U.S. dollar strengthened. Same thing in the euro. All right, we know what's going on in the euro with Cyprus and that kind of stuff, but their currency weakened since January, just like as the equity markets went up. Okay, same thing down here in the Aussie. Again, just looking at the beginning of the year. Here's January. It actually weakened the U.S. dollar. All right, and then actually the U.S. dollar strengthened. I'm sorry, and then for whatever reason here, as of late, the Aussie dollar has started to strengthen. All right, might not be related to gold prices because gold hasn't really strengthened. So that's just related to one currency versus the other, strictly interest rates, whatever it may be. So here, the Aussie dollar has strengthened as the equity markets have continued to go. Same thing over here in the New Zealand. The New Zealand weakened, and then all of a sudden it's strengthened, and it's going the same way as the equity markets. So two currencies right now are getting beaten by the U.S. dollar. Two currencies, the U.S. dollar is getting beaten up. All right. We know that equity markets are going to the moon. Here we have, again, January and February and March, and for the most part, the U.S. dollar has strengthened against the Canadian dollar, and the same thing against the Swiss franc. It's strengthened, and if I pull up the U.S. dollar versus the yen, we know for sure that the U.S. dollar strengthened significantly against the yen for the most part this quarter. So out of the 7 kind of majors there, 6 that I'm showing you here, and then the U.S. dollar, yen, 7, 5 of them out of those 7, 5 of them have had the U.S. dollar strengthening as equity markets have gone up. Now, like I said, in the past when equity markets have declined, if I pull this up to a weekly chart so that you can see more data here, all right, in the past when equity markets have declined, if I can find last summer, right here, 2012, here's the U.S. dollar strengthening as the pound goes down. Same thing in the middle of the summer here in 2011, and then back here in 2010. So right now the U.S. dollar is already strengthened. So my question for you is, if the equity markets go down, and right now the equity markets are going up, but the U.S. dollar is doing well, if the equity markets go down, is that going to be a sign that the U.S. dollar is going to continue to strengthen, and the pound is going to go 50, 49, 48, 47, 46, and the euro is going to go 27, 26, 25, 24? We don't know. In the past, whenever things have gone bad around the world, the safe haven has been the United States dollar. All right, it seems to be somewhat of a safe haven now. Can it get safer and get stronger against these other currencies? I don't know. That's the question I'm putting out to you as you kind of focus on these intermarket relationships. So use some of the past data as far as summertime and what's happened after really good first quarter in the equity markets, and then see if the equity markets do that, and then see if that can help you with this year with Forex trading markets, whether you're a long-term trader or a short-term trader, but knowing that this quarter the equity markets have gone one way, and for the most part the U.S. dollar has gone the same way, so it's already strengthened significantly against these other currencies. So that's the relationship, the quarter 1 review and quarter 2 preview that I wanted you to be aware of based on some past data that's happened last year and the last couple of summers. So again, for a quarter 1 review, we know that central banks are accommodative. We know that they're still there because, again, we just had Cyprus this week at the end of quarter 2, and I don't think that's going away. If we need them to be there in the next week or two as we go into quarter 2, I don't think that they're not going to be there. Technical picture, I said an increase in average trading ranges. We saw that when there was some volatility, but overall, as I wrote in my commentary today, volatility has just kind of gone off again. I showed you that volatility chart. It's declined. Overall trading ranges aren't as big as we'd like them to be for day trading. They're still okay, but we definitely have to get used to range-bound markets. Quarter 2 preview, macroeconomic fundamentals. Again, what is next from the central banks? What's next from global growth? It's been doing really, really well. Pay attention to the microeconomic data, the manufacturing data, the retail sales data, the consumer confidence, the housing data, the unemployment data. Pay attention to that because it's been doing very, very, very well over the past 6, 7, 8, 9, 10 quarters. Can it continue to reward the markets and do better and reward the equity markets up at these lofty levels? If global growth starts to go sideways or back off just a bit, what does that do to global growth and equity markets? So keep an eye on those micro fundamentals by paying attention to the currencies that you're trading and also both economies, how that microeconomic data is moving along. Intermarket relationships, so I showed you some relationships between the US dollar and equity markets. Can you use them to build trading plans? And then the technical preview, and this is where I want to kind of open it up and make sure I review. I reviewed the 7 majors, but if you have any questions or want me to look at any pairs, I'd be happy to do that. So that's where we're at with the review. Fundamental events, keep an eye on those macro and micro events. Technical analysis is your key. I call it being realistic. Whatever the trading range is, that's what you've got to use for your proper risk reward. Don't ask too much out of the markets. So technical analysis is so very, very, very important. And then again, we reviewed Q1 review, and we did as much of a Q2 preview as we could. So I'm just going to slide over here as I bring up the last slide and see if there are any questions that came up. I don't see any yet, but I'll just break into a little bit here as I show this last screen here. I'm going to be doing 2 webinars pretty much back to back due to a little bit of a travel schedule in April. So I just submitted those for compliance issues to get by compliance as they want to see those things because, again, I'm a outside contributor to IBFX, so they just want to know what I plan on saying and make sure that it's compliant. So this webinar tonight will go through their compliance team, and it should be posted on the YouTube page there that you see listed down here, the third from the bottom. But I will be talking to you on, I think it's the 10th, I want to say. The 10th of April and the 17th of April. So instead of taking 2 weeks apart, we'll do it on the 10th and the 17th, 1 week apart. So 2 webinars coming up, and I've been working on that analysis now. So before we get into that, I'll leave you with my email. I'll leave you with the YouTube page there where there's 3 dozen videos, my website obviously, and then dailyforextradingedge.com where lots and lots of great action is being posted and great commentary every single day. But I'll leave you with one pair that I've been focusing on as of late as far as some shorter term opportunities, but just looking at it, knowing the bigger picture. So I want to bring up the pound here. I'm going to go to a much shorter time, so we're on a weekly. Here's a daily with the big decline, so we know that it's been a down move. Then I bring it down to hour 4, and I've been kind of watching it. The weekly chart was kind of helpful because you had a lot of support here that it broke right down here at about 52 even, and then it started to go a little bit lower towards the 48 mark. But I used a couple of things. A couple of things would be, one, mainly, is I understand the direction that's going and the trend that it's going. But 2, I also understand that it broke support, and by no means do I want to go against that as it breaks that support. And we can see the next support is down here. But it did move a very, very, very large amount. And so what I started to see was, as I looked at it on this, I'll bring it on the hour 4 chart, you see it started to bottom out a little bit, and it had a pretty big move. Some people might say there's an inverse head and shoulders right here. Here's the head, here's a shoulder, here's a shoulder. And it had a pretty big move up. And then lately, just in the past half month or so, it started to have some pretty sideways action here, and just it wasn't breaking lower. And again, as you saw, some of the other currencies started to pick up against the U.S. dollar as well after it overshot itself maybe. And there's the 1 hour chart, and you can start to see that there was a kind of a high level of support right here in this area. And I'm sorry, I got to move the panel to see the right side of my screen. But right here, about 50.80 or so, pretty strong area of support. You have a resistance level up here. So it might be interesting to see what happens as it comes back down to this level. Again, what gets it to that level, what fundamentals have changed by the time it gets there, what other things do we know. But overall, that 50.80 is just something I've been keeping an eye on more for the shorter term, but knowing the bigger picture. So I just wanted to leave you with that because I know a lot of you are shorter term. I urge you to do the same thing. Whatever pairs you're trading, wherever you are around the world, in whatever time frame, whether you're trading the Aussie dollar against the New Zealand, it doesn't matter whether you're trading the euro against the pound, wherever you are around the world, go ahead and look at that 4 hour chart, knowing the trend, and then that 1 hour chart. And here's a little bit different. The euro, you can see, continues to make lower lows and lower lows and lower lows. We know the euro has been beat up against the U.S. dollar, and we know the euro is the bad currency, I guess you could say, out there because of Cyprus and things like that. So when you look at the euro versus the pound, you will know that the pound now is going up to sideways against the US dollar. The euro is going down. So if I go to a new chart here and I pull up the euro pound, I'm expecting the euro to be going down against the pound. And there you have it. If you look at the daily, the euro is continuing to get weaker and weaker and weaker. Where is the euro going to go against the pound before it starts to find some support? Had a little bit of support there, has a little bit of support here. So maybe you're looking at the same thing. If you're not already on board, it's a little bit hard to maybe get short the euro down here. You'd be going with the trend, but obviously it depends on your risk reward. But maybe you start looking at some places down here that you might be interested in finding to see if it can find some support, just like the pound started to find some support against the US dollar. All right. So for your shorter term time frame, start with the big time frame, the daily, even if the weekly if you have to, then you can move down. That's the nice thing about Forex. We don't have 10,000 stocks to look at in the equity market. We have a handful of stocks to look at that fit your trading time frame wherever you are around the world, the Asian session, the European session, the American session. Here I've got 6 or 7 or 8 to keep an eye on, and I can get a pretty good idea of what's driving them fundamentally, especially because I live in one of the currencies. Now I just have to look at 6 or 7 other currencies and see what the trend is doing and what's going on there. All right? So I will leave you with that. I thank you for your attendance tonight. Have a great evening. As always, happy trading, invest intelligently, and you know how to get a hold of me if you have questions. And I look forward to seeing you on the next IBFX webinar that I will be doing on the 10th of April. In between now and then, take advantage of the websites where I provide daily market commentary on, like I said, an almost daily basis. So again, thank you very much and talk to you soon.